3, 2, 1, go. Hi, my name's Jamie Macgregor, and I'm the CEO of Celent. Thank you for joining me today. During this session, I'd like to cover the theme of executing at scale. We came up with this theme intentionally as we looked through the submissions of Model Insurer and also Model Bank and Model Wealth Manager, which have been running for over 14 years. And what I'd like to do in the next 20 minutes or so is just take you through that as a concept to hopefully give you some fresh views in this rather unusual time of a pandemic. I'd like to cover the notion of execution. I'd like to explore the role that fintechs and insurtechs have played across the industry in helping to change things. I'd like to discuss the role of incumbents and how maybe just right now, this is a perfect time for them to take advantage and hopefully apply the lessons learned for their own business, and also talk a little bit about the path forward. I'd like to thank Dan LatAm as well. So Dan has been behind this research for Celent. So a lot of what I'm going to share with you today is his research, and he's the Chief Research Officer, so more from the banking side than the insurance side, like myself. So thanks to Dan for pulling this together. So without a doubt, we face an uncertain future today. Who would have thought way back just 2 to 3 months ago, we would be where we are as a world right now? Many of you would have been tracking the headlines, both from the economic side, like this one from the IMF, and also within the insurance space. So the number of new dividend calls, raising capital, concerns over profits. It's hard not to see it in everyday life, and it's going to change us without any doubt. But given that, so I think an uncertain outlook does demand an increased focus on execution. So hopefully what we go through today will be helpful. So let's start with the notion of execution itself. Now, many of you, I'm sure, would have read this book. So from Larry Bossidy and Ram Charan. So the idea of execution certainly isn't new. This book is dated 2002. There will be ones before then, and there will continue to be new books being written about it regularly. But certainly, it's certainly not a new concept. Being big as well is no excuse, right? So Who Says Elephants Can't Dance by Lou Gerstner, the former IBM exec, was again another very, very successful book, also published in 2002, making the point that you can pull together a variety of different small incremental innovations and make a big difference on a large scale. And when we look and speak to our clients who have helped us in our research and also helped to inform us of our views and our opinions, sort of unpicking what good execution looks like is sometimes quite difficult sometimes. You can see it after the event, but really knowing the recipe is very difficult. And this came through from interviews with clients. So one interview, for example, with Dan LatAm and a client of his, expressed a little bit of surprise initially, saying, well, you've shared so much in the case study with us about your ingredients for success. So I can't understand what your motivation is for wanting to be so open with us. And the answer came back that basically you can know the recipe, but the art is still in the cooking and making the cake. And ultimately, that's where the success comes. It's all about execution. So knowing the ingredients is not enough. So if we reflect on what's happened across the industry, new entrants have certainly pushed incumbents hard in the marketplace. And just looking at some headlines, for example, there are no shortages over the last 5 to 6 years of headlines announcing the death of traditional incumbents in the fintech arena. Largely banks and wealth managers focus quite often, and sometimes often even as recent as 2018, focusing on the disruptive effect of robo-advisors. Some of them are genuine and certainly are showing new ways of working. Some of them are still yet to be seen, still yet to show their value coming through. And in the insurance space, Lemonade is quite often a quoted piece about a totally new insurance company built upon digital from the outset, from trying to change the way that the whole industry is working. And likewise also Zhong'an. So this is a definite east versus west, new business models coming through and pushing the market hard, making the market rethink which way they're heading. But not all fintechs and insurtechs have been able to follow through on their original plans. So some of them, for example, like even sort of 9 months ago, Zhong'an CEO stepped down because of a profits issue. Not necessarily what they were doing. It was just more about sort of where's the value coming out. In the banking world, Robinhood setting up a new savings and checkings account couldn't get the insurance it needed to transact. Now, you could argue that even the smallest bank in the US would know about some of the compliance issues of not getting this ready from the outset. And that sort of mistake would never have been allowed to run for as long as it was. But definitely sort of an interesting viewpoint. And then there's pivots, right? So not all fintechs or insurtechs sort of necessarily have sort of failed on the execution front. Some of it is being questionable whether in fact the market has been there and a pivot's required. So Moven Minds pivot towards business to business, and the insurance space we've seen quite a few of that too. So if you take, for example, the Trove piece, Scott Walczek quite openly has spoken in various podcasts with individuals about their decision to pivot away from certain markets, from being a brand, an insurance brand themselves, towards being more of a platform, a digital platform from which to help grow other people's businesses. And it's likely that as the pandemic sets in, we could see an increase in winnowing as investors look to try and accelerate the returns that they were expecting in this current uncertain outlook. So in the banking sector, SoftBank has been a huge investor in multiple different tech projects around the world. Cabbage being a lender in the US, that story continually evolves, right? It's a great example of technology, but when it comes through, the downturn in the credit cycle, it becomes very difficult to operate, when you actually need to create cash. Yes Bank as well, as another model bank example, was a model bank winner from just a few years ago for their API technology. So celebrated for a lot of their technology execution, but ultimately, unless you can sort of cover the loans that you're actually making, sort of that business also sort of has come to an end. And if we look in the insurance sector, there are multiple models now. If you look at different sort of emerging tech trends that have come through in the insurance sector, whether it's around peer-to-peer insurance, or whether it's around like this one, gadget insurance, or whether it's around sort of any other sort of IoT related piece. Huge promises, great ideas, really successful implementations of the technology, but ultimately the customer's not willing to buy the products that are out there, then ultimately the business will have to close down and pack up. So it's not a case that necessarily all these things are failures. They're just good hypotheses that were tested, but unfortunately proved not to be true in the eyes of the customer. And that's something which all of us will face. And the reality is, as mentioned earlier, yes, the pandemic is focusing minds. It has to, as either some parts of the market fall away from a demand point of view, alternatively because basically cash, the race for cash. It's definitely sharpening the focus and accelerating as we all change our behaviors in ways that were just simply unimaginable in February. Who would have thought that we'd be doing this virtually way back at the beginning of February and not doing it in person, for example? So let's hopefully give you some sort of framework to help you think through your options as you look out towards the future and you think about executing at scale and how it sort of plays into the world in which we operate, both from an innovation point of view, from a fintech and insurtech point of view, and from an incumbent point of view. Here's a 2x2 matrix. You should expect to see something like this from a firm like ours. This was, as I mentioned, was created from Dan. And what you can see here is that along the horizontal axis, you have scale potential. So from a modest scale through to an ambitious one. And then on the vertical axis, execution capability, obviously the focus of this discussion. So between sort of mediocre towards excellent. And ideally, most of us will always want to be in the top right-hand corner where we have both scale and we're excellent executors and therefore can deliver on the value promise. But the reality is, it's sometimes hard to get there. What's the pathway to get there? So we take each corner in turn. You can see that, sort of in the bottom hand corner, those who may not have the scale from the outset might be quite sort of green and fresh from an execution point of view. Here you see a lot of the startups, the initial startups, whether around fintech or whether around shorttech. Radical innovations are quite hot in this sector, but generally getting the uptake with clients can be quite hard. It can be quite modest uptake. And as a result, some of these will disappear, they'll run out of money, but some of them will go on into other places. So it's just a question of, so what are the ingredients, the unpicking points to enable you to do that? If we move across towards really the incumbent zone, so incumbent launches, maybe some big tech coming into the sector, you can get a range of innovation levels between incremental and disruptive in this zone. But again, typically a modest uptake due to really middling or quite difficult execution. So how do you build scale on a very difficult concept? Scale as far as company size may not be enough in this particular section. And again, some of these will survive and go on into the top right-hand corner, and others may just fade away. If we go to the top left-hand corner now, so here you see this is the zone of the incumbent experiments. So where a lot of focus is being put in on execution to get into a marketplace. There are some big techs and fintechs in this area as well as they scale and build a little bit more towards it. Again, you'll see a range of innovation levels with some modest uptake. And again, there'll be a situation where you can either scale and move into the right-hand corner, alternatively can fade away. And then finally, possibly this is the zone of the large incumbents. Building brand, building customer base is really hard. Few financial service companies enable them to do it at speed. But quite often in this zone, you don't see the radical innovation you see maybe in some of the other zones where there's more experimentation opportunity. Here you get sort of like almost trusted bets, a series of incremental innovations, but going back to what we said at the start, which is sometimes when they combine together can create a radically different proposition using fairly safe bets. So large products, which collectively make a huge impact. Now, as you can see in this list, ideally you want to be able to sort of navigate towards the top right-hand corner as quickly as possible. But we know that can be quite hard.
Here's what I found.
So to use an analogy that is sometimes often used in these environments is that big ships can withstand strong seas. And this is the incumbent advantage. Maybe it's an overused analogy, but certainly there. And the larger you are, sort of the more ability you have to withstand sort of rough seas and changes. It takes time to build momentum when you're a large ship. It takes time to set the correct course as well. So again, the analogy, difficult to steer sometimes, but once you get going, they can be formidable, especially in the rough seas. Agility can be good on top of this as well. So the smaller craft can be faster at accelerating, can be faster at turning. But sometimes, when the rough seas are just too big to take, they can catch up with the smaller craft. And arguably, you could say that's the situation which we may find ourselves in the midst of this economic crisis. But in the end of the day, so when you actually look through it all, there are many advantages to being an incumbent, which sometimes fintechs and shorttechs don't have. So maybe this is the time that we see that inflection point switch and go back, yet to be seen. First of all, so what is it that incumbents have over the smaller fintech and shorttech rivals? The first thing, big ships have customers, and customers are unlikely to be going anywhere, at least in the short term, unless they're really badly mistreated. So the key thing is, to build that empathy and to build that excellent digital service. Second, they have brand. Brand is a really tough thing to build. If you're not a giant FS or another brand from another area, it can take decades to build that brand up and that trust level. So getting the scale can be quite difficult unless you're willing to put a lot of money into supporting that brand development. Incumbents have assets. FIs are much better positioned than they would have been on the back of the last financial crisis, heading into this one. So they're far better capitalized and they're far better set up to be able to weather the storm, arguably. I much prefer to be a 1,000-man organization today than a 10-man startup heading into financial services. They have data. They have huge amounts of data. Sometimes too much to know really what to do with it and to look for the patterns. But soon, if you believe, like I do, that the emerging tech space will deliver tools that are increasingly better, already better, in fact, many of the analytical tools, we'll be able to do much more with the data that we have. And it's a real treasure trove. There's no reason that any financial services can't use its own data and do what any insurtech or fintech does and augment it with external pieces if it has the will and it has the internal assets to be able to sort of leverage and use against it. Experience. Execs at incumbent firms who have seen a downturn in the past will have more experiences in their toolkit. They'll also have more tools around them to be able to use to be able to apply this. And one of those, of course, is regulatory competence. So, given the complications of what we're seeing and the speed of change, having experienced folks on the team is a godsend right now, who really know the regulation, really understand where the pitfalls are, and perhaps also know the regulators themselves to be able to work out which way they're likely to turn is a major advantage in the marketplace. So maybe things are changing. And incumbents, we know, use these advantages well. And when we look back through our own model insurer and model bank and model wealth management programs, you can see it in spades across the whole population. So this year, for example, we had 273 entries from 46 countries across each one of our 47 award winners. So insurance obviously makes up a big proportion of that. And you can get more information through the Celent site and visiting our own hub page, which has a lot of the details of each one of these. Drilling into the data behind that and actually sort of segmenting it and looking at what type of projects are being delivered, you can see that, according to our definition anyway, 88% of those model insurer winners this year executed at scale. So these are incumbent firms who are using technology in innovative ways to really scale up and prove a value to their business. 12% are sort of either from outside industry or alternatively radical innovations that have yet to prove value. And if you take this year's winner, model insurer winner, so Cathay Life of Taiwan, they're a great example of this. So in acquiring customers at scale. So this is a customer experience, digital experience play. And what we've seen is basically an increase of 200,000 users with $1 billion revenue increase on the back of their excellent engagement platform. So it can be done. It can be done. And it's not just obviously insurance and other places. You see it in banking as well. So Citizen Bank, winner of a Model Bank Award this year, has done something similar. So again, sort of making clients feel like they're smarter with their own data, technology refresh, putting things into the cloud. Again, sort of roll out to 8,000 people in one go. All those sort of things are great examples of executing at scale. And in the model wealth management piece as well, which is obviously aligned to some of the life spaces in insurance, Fidelity Investments in creating an ecosystem exchange to be able to basically plug in different apps and different ways, different services from other players, created a whole ecosystem with 175 different parties. Incumbents can do it when they put their mind to it. So, ask yourselves about the implications of executing at scale. And then also let's think about how that then applies to the different parts of the value chain, because I think there's some good examples and some good takeaways here. So what does it mean for financial institutions and insurers like yourselves? So the first one, really, if you look at the front office, the reality is that where we are, changes in customer behavior will accelerate further. They've already been going quite fast around digital experience, but they're going to get faster. So we long maintained that basically the key thing that any financial institution needs to do is to create that digital experience around empathy with their clients. So what does that mean in practice? Without a doubt, it will mean a reduction in in-person interactions whilst the pandemic goes on. We've already seen that. We've already seen firms prioritize certain services to be online over any other face-to-face piece. And the companies that will win will be the ones that can agilely develop those things very quickly if they don't have them today, already have them in place, so around sales and service. That inevitably drives more and more people as people get more educated around what's possible towards wanting a better digital experience. So not only does it increase your reach as a firm, but again, sort of the use of it will basically educate. So it's a case of educating customers too. Without a doubt, it'll also mean some new challenges to identity. We'll have to be smarter in the way that we actually understand customers as they come through the digital channels to check that what they're saying is true and accurate on each one of these things, as well as also continue to deliver an excellent service. And it does mean, across all our channels that we need a better model to be able to deliver against it, which probably means, increase in different ways to engage around collecting money, around paying money out, around delivering the service that we're trying to do from an insurance point of view. And then also, fresh ways of doing things. So again, sort of the classic example of, say, an auto claim by an app. So self-reporting of claims, but obviously doing it in a way that can be can protect your bottom line. And all those things inevitably lead to changes in the middle office. You can't do the front things without doing changes elsewhere across your organization. And as we've seen through the pandemic, sort of shift to work from home. Will it last? Yes or no? Sort of certainly the outlook for the moment is into 2021, where we have to continue working this way. But it does bring in some security pieces. It does make us think about our supply chain and the risks involved there. Increased use of video. It just, do we have the hardware at home? Do our people have the hardware? Many of you would have already gone through this and made these decisions already. But there are quite basic infrastructure pieces that also need to be looked at. The evolution when we go back to work of those environments. So will they be as densely packed as they were before? Probably not initially. But again, sort of how does it then evolve? How do you bring that experience through, that digital experience that where people may have had to speak to their advisors on Zoom or their claims adjusters on Microsoft Teams or anything of those sort of things? How do you continue with that level of engagement? And then sort of just thinking about what that actually means from an interactions point of view. So things like digital signatures for those who haven't started adopting those. So, the ability to sign contracts. It's amazing. And I must say that, being head of Celent, I see a lot of contracts and have to sign contracts. How many of them clients still request a wet signature is still quite high. New data usages, without a doubt, whether it's around underwriting, understanding the customer, improving that streamlining process, plenty of opportunity there around machine learning, whether it's also around natural language generation and reading and image recognition. And of course, let's not forget, across all this, heading into next year, some firms will be under a lot of financial pressure as well. So a renewed focus on costs. And we can, I think today, deliver a brilliant, excellent digital service and also deliver on a cost reduction agenda at the same time. Might not have been true 5 to 10 years ago, but today I genuinely believe that's now a real possibility. And ultimately, those front office and middle office pieces flow back into the back office as well. So while there's no practical way for many office employees to work from home, so how might processes start to be restructured in the future? So again, thinking the re-engineering of the business. So will robotic process automation increase? I think it already is increasing quite fast, but it's likely to accelerate further. SaaS and cloud adoption, I think has probably been the biggest boost to that over the last few years, over the last few weeks that we've seen, and that's likely to continue into next year. And consultants, the people we choose to partner with us, how we work with them. So it's not just the internal firm view, it's how do we work with our supply chain partners? How do we work with our advisors? How do they come into our organization? How will that relationship change? And will the nature of that work change too? And cyber threats as well, without a doubt. As soon as you expose more of your business processes to an online world, you have to have a decent plan around security on your infrastructure. So, when you think about all these things, there's lots of changes on the horizon which have been catalyzed and focused by our current situation. And I think, if you reflect on, sort of between the, sort of the startup and the fintech, which have been great at sort of like spurring ideas, and the incumbent, sort of it's a question about, sort of can we as an industry take on many of those attributes we need to, and win in the environment that's coming up. So what now? So without a doubt, everything that I've discussed so far cannot be done without a solid technology agenda. And with each crisis, the technology agenda changes, and already we're seeing many of those seeds going into the future technology agenda. So it will change. What I would say is that not everything has to be as radical as sometimes we make it out to be. And we should take heart from knowing that not all projects need to be as headline worthy as maybe some of the model insurers and model bank winners. You don't have to be at that radical end of innovation. You just have to be really good examples of technology adoption. So here's a bit of advice as we head into the future world. First of all, summarizing all of this is, let's not try to be who we're not. We are incumbents. We have many of the attributes associated with that. But let's be aware of who we are and what we are, and try not to, sort of be things that we're not. Second, leverage the strengths that we have, whether it's around brand, whether it's around customer, whether it's around data, whether it's around assets, whether around regulatory competence. All those things are phenomenally strong in an incumbent firm. Let's be humble. Let's recognize that we don't know all the answers, and we have to adapt and change as things go on. Empathy, both with our clients and our employees, is incredibly important right now. Acknowledge our weaknesses. So we know what we're good at, and we know what we're not. And by implication, so be willing to partner. Historically, the industry has always been a little slow to partner, but I think right now there's been no better time to revisit that as a firm and really ask, what does good look like when it comes to partnering with those, with our partners? It's a skill that can be practiced and can be improved. And if we get it right, it will yield dividends. So hopefully that's been useful and sort of an interesting view on potentially how things will develop as this pandemic goes. And executing at scale is a key theme, I think, that all of us need to be taking into the outcome as we come through the other side. So let's end on just a few personal observations. Number one, we're all in this together. Nobody really has, sort of the knowledge of what will happen next. Therefore, there's plenty of opportunity for us to learn from each other and recognize that we are where we are. Without customers, there is no business. So the most important thing we need to think about is retaining, delighting, and educating those customers. Each of you out there is facing the same short challenges, and you'll all be graded on the same highly altered curve ultimately. So nobody really has, sort of the secret to which way this will end. And when executing at scale, if we do it right, I think we have a chance to actually grab the customer for life. So your challenge is deciding on how the actions you take for your customers over the next few weeks and months position you and them for the long term. I urge you as executives of the insurance industry and as people to rise to that challenge. So over to you, and I wish you luck, and just let you know that Celent is here to help you as you navigate your fresh new technology agenda. So thank you very much, and we'll now end the session. Thank you.